wasn't exactly Donald Trump's fault. Let's just say it had to do with trade, but the NASDAQ, the S&P, and yes, the Dow now lower for a second day in a row. It's Thursday, August the 23rd. Tonight, drop me at your peril. Donald Trump warns we'll all be poor if he gets impeached. The Rands left reeling as the president turns on South Africa and how to drive over that Brexit cliff edge. Britain lays out its worst-case scenarios. I'm Paula Newton, and this is Quest Means Business. Okay, tonight, high crimes and market crashes. Donald Trump is sending a message to Congress, impeach me, and we'll all be, in his words, very poor. In a friendly chat, we'll call it, with Fox News, the U.S. president predicted stocks would nosedive if articles of impeachment are ever brought against him.
You know, I guess it says something like high crimes and all. I don't know how you can impeach somebody who's done a great job. I'll tell you what, if I ever got impeached, I think the market would crash. I think everybody would be very poor, because without this thinking, you would see numbers that you wouldn't believe in reverse.
In reverse. Let's be clear. The American economy is quite strong. The Dow is up nearly 30% under Mr. Trump's watch. Corporate profits are absolutely booming. Insert any hyperbole you want to. And thanks to the president's tax cuts and deregulation, banks have never made so much money. But Wall Street has taken the most recent round of White House turmoil, as we've been telling you, quite frankly, in its stride. The markets have barely budged as talk of impeachment has grown louder. Earlier, during Quest Express, Peter Tuchman told me the fundamentals are strong no matter what the heck happens in Washington.
The prediction that the market was going to crash if Trump got elected did not come to fruition. Brexit, it did not come to fruition. We've seen emotional, headline-driven sell-offs over the last 18 months due to geopolitical, geoeconomic stuff and some internal stuff here in the U.S. because it's a bit of a wild card coming out of Washington. I think obviously there'll be anxiety in any kind of an impeachment.
And little tremors, market tremors, we should call them.
They're tremors, but at the end of the day, if you look at the graph from the last 18 months, it's going from lower left to the upper right. So the fundamentals are the same. Will that change if the president is impeached? It will, my opinion, will be short-term anxiety. I don't know. I don't believe the market will crash.
Paul Donovan is in London. He's the chief economist at UBS Global Wealth Management. And Stephen Moore is in Washington. He has been an economic advisor to Donald Trump. Stephen, we will get to the fact as to whether or not you still have his ear. You know, I'm going to get through that right now. Have you spoken to him recently?
With President Trump?
You got it.
I talked to the president about a month ago, and you know he's you know, very gleeful about this economy. He feels like his policies have been a huge success. I remember I said to him, you know, Mr. President, these policies are working better than we even thought. And
okay, Stephen, perhaps on some of that, I'm sure many people in the United States would agree, especially the people on Wall Street. Having said that, he is assuming that the great downside risk to this economy, Stephen, is the fact that he gets impeached. We spoke to many people, many analysts who say that's just not so. The market wouldn't like it, but at the end of the day, this has been a very long bull market. It started under Obama, and quite frankly, his words are, to use the term, bull.
Well, look, I mean, a lot of the people you speak to, Paula, frankly, are the people who said that if Donald Trump was elected president, we'd have a, you know, second global depression, and that Trump's policies would destroy the economy and so on. And we've had a 40% rise in stocks. We've had the best economy in 20 years. We have 6 million more jobs than we have workers. I mean, so all of the analysts, and frankly, I'm embarrassed as an economist because most economists had the whole Trump rally completely wrong. So if Trump were not in the White House today, yeah, I think the economy would suffer for it, and so would the stock market.
Paul, I want to bring you into this conversation. You know, that is one thing that you hear when you talk about the deregulation, the tax reform, and just the business-friendly environment. Is that true, that if the market, if CEOs, and never mind the stock market so much, but CEOs, as they're doing their 5-year plans, if they were to contemplate that kind of turmoil in Washington, do they believe it would severely cripple the economy?
No, of course it wouldn't. First point, any country in the world, politicians are not nearly as important as they think they are. Economists are important, of course. Politicians are not. The economy jogs along perfectly well because in the near term, what matters is the answer to two questions. Do I have a job? Can I afford to buy what I want to buy? And actually, politicians don't have a great deal of influence over those questions in the short term. The second thing is that if there was impeachment and conviction, remember, impeachment and conviction, not the same thing, but if there was impeachment and conviction, what do we get? We get President Pence. President Pence's tax policies, in terms of domestic taxation, pretty much the same as those of President Trump, possibly even slightly more market-friendly. Policies on deregulation, pretty much the same. Policies on trade taxes, remember President Trump is raising taxes at the moment, policies on trade taxes probably better for the market than under President Trump. So I don't think that the market would take a negative reaction to impeachment and conviction if we were to get that. Frankly, I don't think we will, but if we were, I don't think we should assume it's an automatic negative.
Okay, Stephen, in terms of Trumponomics themselves, and if we take your point that the policies have been good for business, some policies haven't. You have to admit there is some downside risk to Trumponomics, principally right now on the issue of trade.
Mm-hmm. That's right. I mean, this is a risky strategy. I'm more of a free trader than Donald Trump is. And, he believes that we need to get very tough with China. By the way, I happen to agree with him on that. I don't think we can live with the status quo any longer of them stealing from us and not playing by the rules. And so the big question with respect to trade is whether this will all turn out okay. And, the market seems to have a sense that at the end of the day, Trump will win. I think he will win. China needs the United States a lot more than we need them. And if Trump does get a victory on trade, and I'm not guaranteeing that, but I think in the end of the day, he will, then I think you're going to see the stock market even go up, further than that. So, and by the way, I agree with a lot of what Paul said, but I disagree fundamentally with what he said at the beginning. Politicians, the president makes a huge difference in terms of the economy. I mean, there's a reason the economy, Paul, was growing at 1.5% in Barack Obama's last year, and now it's growing at 4%.
Well,
it's because, that's a huge seismic difference.
I'm going to get Paul back in here, but that's from a very low point, Stephen, and we've been through this before. Paul, go ahead.
Well, I mean, the U.S. economy is growing not at 4%. That's on an annualized basis.
The last
the U.S. is the only country in the world. So it's growing slightly above trend, 2.8. And yes, of course, it's doing well. You've just had tax cuts which are deficit financed. So that's given you a boost in the near term. And the U.S. economy over the last few years has been humming around plus or minus trend growth. An independent central bank, I think, is a key part of that. The flexibility of the labour market is important. The fact that we're recovering from the worst economic downturn in 70 years is also a part of that. The direct impact of policies on this still relatively small. I mean, we look at the tax cuts, they haven't induced a significant increase in investment. The latest US data is showing no significant change in investment trends. We're not seeing an increase in investment in education. So people aren't taking personal tax cuts and increasing in education. But it's doing fine. I mean, I'm the last person to deny the US economy is doing perfectly well. I just think that's more because of broad economic trends rather than any specific set of policies.
Well, one thing I'd say about this is, Paul, you should just go out and into the major cities in the United States. I mean, I've been on the road now for 4 or 5 straight weeks. Whether you go from Portland, Oregon, or to Portland, Maine, there is a construction and infrastructure and spending boom, investment boom like I've never seen before. We're in the midst of the single biggest construction boom, Paul, in the history of the United States. And again, how can you say we're not having capital investment? That's exactly what that building boom is.
But it's a very small part of the economy.
Construction of factories, of warehouses, of office buildings. You think that's a small part of the economy? It's the best lead indicator of where the economy is headed, this investment boom that we're seeing. And the numbers have been very strong and steady.
Everywhere except in the data. If you look at the data, the capital spending numbers are basically where they've been for the last couple of years. It's not bad. I'm not saying that you've got bad capital spending. The U.S. economy is jogging along quite nicely at around its trend rate of growth, which is what it's been doing for the last few years.
And I have to call time there. I will point out there is still no government infrastructure bill. Stephen,
I'm talking about private infrastructure, not public infrastructure.
I know, but we were promised that infrastructure from the government. Look, I'm getting in big trouble here, folks, but we will have you back. Stephen Moore, thank you so much. We will see you anytime, especially in the hour after you've spoken to the president. Thank you very much, Stephen.
Thank you.
Paul, glad to say we will have you back a little bit later in the program to talk about your latest research there at UBS. Now, what are economists worried about in that trade war? Christina Alessi is here. She is going to talk to us about what is going on with trade. We just had the debate with The Economist. Today, we actually had movement on trade, but not in the direction that we wanted to see it. I mean, the tariffs came into being. They're a reality now.
They are a reality, and this is a ratcheting up of tensions, right? This is the tit for tat between the U.S. and China. The U.S. imposed tariffs on $16 billion worth of goods. China retaliated quite swiftly. China also took the additional measure of filing a complaint with the WTO today. So we're not seeing a de-escalation at all. Now, the optimists would point to the fact that Chinese officials are here in the U.S. meeting with Treasury officials today and yesterday to talk about a potential deal. But no one I've spoken to today, and I've spoken to a lot of people, thinks that a deal can come out of these talks. So it's, yes, the Chinese are at the table. Yes, there are talks going on, but what's to come of them is the big unanswered question here. In the meantime, CEOs are trying to figure out how to run their businesses and how to save potential the companies from laying people off because of the tariffs.
And we were just talking about trade as one of the downsides to that Trumponomics. Another one seems to be the immigration policies of the Trump administration. And we have business stepping up and basically saying, we don't like where this is going.
Right. The preeminent CEO business group that does a lot of lobbying in Washington, D.C. put out a letter today saying that the immigration policies of this administration have created a lot of disruption in their business. In fact, they pointedly said that these policies have resulted in arbitrary and inconsistent adjudications for many of their foreign workers, and that impacts business operations, right? You can't have perhaps some of your most talented employees. In some cases, we're talking about STEM people in engineering jobs, in science jobs. Those are competitive, and they're tough to get employees to come over. And once you get them over, there's this whole question mark over their status. It creates a lot of disruption. People forget that, yes, CEOs love Trump because of the tax cuts and the deregulations, but the deregulation that's taken place. But they also do not like him for all of this uncertainty over trade and immigration.
The unpredictability.
And the divisiveness that's putting them on the spot, right? They've got people like me calling and saying, the president just says something divisive. Are you going to stand with him on this or that? CEOs don't like that. They shy away from controversy because they don't want to alienate any of their customers.
Yeah.
So.
And again, it's not very predictable in terms of what will happen to them through that business cycle. Christina Alessi continues to follow both issues. We appreciate that. Now, the South African rand, meantime, is falling against the U.S. dollar. And again, you guessed it, because Donald Trump criticized the government's land seizure policy. Now, the rand is down, as we were saying, by more than 1% as it stands there. In fact, now down almost 2%. The Anti-Defamation League denounced Mr. Trump's comments, calling them deeply troubling and saying it's a white supremacy talking point. Now, the South African government also shot back, tweeting that these words were reminiscent of the country's colonial past. We want to go straight to David McKenzie in Johannesburg, who has been following this. And I know exactly what a complicated issue, an incendiary issue this truly is. Is there a feeling there that Donald Trump really isn't reasoning with anyone, isn't showing any rational thought when he tries to interject himself into this, what is a very contentious argument in South Africa?
Well, the short answer is yes. I think that is the predominant feeling, both from the government and from many people in South Africa, that the president didn't necessarily put much thought into these tweets and into this tweet, and that the Fox News segment, which he appears to have based it on, Paula, is in fact factually incorrect in two ways. One, the farms that they describe as being seized aren't being seized right now. And two, farm murders, which are, of course, tragic, are, according to at least one agricultural group which surveys this, at 20-year lows. So based on the facts and that this is a presidential tweet wading into a very sensitive domestic issue here in South Africa, it hasn't been viewed very well at all. Paula?
And when we say not viewed very well, it was interesting. I want you to hear now, we spoke to the opposition leader of the Democratic Alliance, and he tends to agree with what the government is saying. Take a listen.
What's absolutely crucial for economic terms is that we have trade relations with the U.S., certainly around our agreements on AGOA and much of our exports into the U.S. And we want to enhance that relationship. For South Africans and from where we stand, we've always upheld that we are going to produce policy, we're going to ensure that private property rights are protected, and we want to be able to enhance trade relations with the US. And so for President Trump to have taken that stance is certainly not helpful for bilateral relations, which I think are beneficial to both countries.
Yeah, the implication there, David, is that if you really wanted to help South Africa through this very difficult time, you would butt out. I mean, do you think there will be any long-standing economic or political consequences to this, assuming that Donald Trump and Secretary Pompeo don't go any further with it?
Well, I don't think there'll be any long-term consequences necessarily of President Trump's tweet. Now, it depends on how the State Department, as you say, reacts to President Trump's tweet. I'm sure that there are embassies throughout this continent today from the US side that we're trying to figure out how to deal with this, like there have been for several times that President Trump seems to have gone out on the cuff and dealt with foreign policy issues in this way. The issue of land is a serious one in South Africa. It's been debated, as you saw there from the leader of the opposition. He has very different views on many aspects of this than the ruling ANC does, which wants to accelerate land, possibly land with a redistribution without compensation. 70% of the land here in South Africa, private land, is owned by white South Africans. The government says they want to redress that issue, which is a kind of a hangover from a racist past. The investor outlook on South Africa is quite tricky when there is this overall lack of clarity on how they're going to actually move forward with these policies. But that is a very different question and debate from what President Trump was talking about, which in essence is largely a white nationalist conspiracy theory that is being peddled for several months in the way that he framed it. So it's a complex issue, but the way that it was framed in that tweet, at least, will be seen universally as divisive here, I think, by most people in South Africa.
Yeah, and it was clear that both the opposition and the ANC basically saying the same thing today. Our David McKenzie, thanks for staying up for us to guide us through what has been a very complicated day, both economically and politically. Appreciate it. Coming up, the consequences of a no-deal Brexit, how crashing out of the EU, yes, we said crashing out, could hit the UK's pocketbooks and its hospitals. Flexible approach to wealth management. UBS tells us why some investors on the LGBT+ community could be missing out.